Okay, I'm going to talk about another Treasury trade, a setup that happened on Thursday. You can see by the layout I have here, I've got the ZN, the ZB, and the ZF, and right now I'm primarily looking at the ZN, and it's about to crack the highs for the day. You can see here I've got that big print, 2536. It starts pushing through, and as I see it pushing through, I'm thinking, okay, I should be in this for a couple of ticks, and got an order in, clearly late, started chasing the trade and thought, okay, this is probably not a great idea. At the same time, I started looking over at the ZB and realized that the ZB contract had not yet cracked its highs. And so now I'm looking at it, and I see that 44.66 step in the profile, and I think, okay, 27 is a pretty good place to get in. So you can see here I click my order in, and I really got a lucky fill. You'll see. I mean, just watch, watch the bid asks. It doesn't even look like it clicks down into 27, but I got in. It came right up to 29. And when I saw at 30, it hardly printed. It didn't print at all before it kind of ticked back at the bid. I went ahead and exited, and you can see here at 30, there's just no buyers that are interested in pushing us up above 30. So I got out at just the right time at 29, just with 2 ticks. But the reason I wanted to show this is because the ZN, the ZB, the ZF seem to work pretty closely together, and you can use the contracts together to kind of gauge breakouts or fail breakouts or things like that. Because oftentimes if one starts to go, then it may be leading the others for the day or for that particular moment. So this was just a really great example of that and how you can use one, with the other. And I'm kind of following the no BS day trading stuff, and he uses ZN, ZB, and ZF, which is the 5-year. And I have not attempted to trade the 5-year and don't know that I will. So right now I'm just sticking to the 10-year and the 30-year at the moment. You can see here it starts, it kind of came back a little bit and is still trying to crack the highs. And a little bit later, what happened here we jump over here, it's about 9 o'clock, half hour later. It's come off the highs, and what I wanted to show in this area, or in this part of the video, was kind of the range trading that takes place. And notice at 6.5 over here on the ZN contract, 2066. Just take a few minutes. Let's just take a look at the volume that hits at 124, 6.5. So there's over 2,000 contracts there. This is hitting the bid. 489. We had 1,100 hit the offer. 1,400, 1,500, 1,600. So I'm looking at this. I'm seeing that there's another iceberg here. So it's just absorbing all of this volume right here at 6.5, and I'm thinking, okay, this might be a good place to enter 6.5. It looks like it's a big step in the profile. Sellers don't want to take it down any further, or at least the buyers are not giving up this ground. So I'm just watching this closely. I'm looking to see if it breaks through 6 even. We got 563 that printed there, and buyers haven't come in. They're not active buyers yet, but certainly they're, the buyers are passive. They're holding up the bid. They're putting on icebergs, refreshing orders. 5,000 plus contracts traded there, and it didn't budge past 6.5. Now I see the active buyers start to come in. I put my order in here at 6.5. Now, this is where it takes a little bit of patience in the Treasuries. A friend of mine wrote me a message and say, watching the Treasuries is like watching paint dry, and he's absolutely right. If you're looking at a chart, it's just really boring. But we're not looking at a chart. We're looking at a detailed view of the price action, and it's a lot more exciting when you're looking at the price action. But you do need a bit more patience than maybe with ES or some of the other contracts. And here I got a little bit nervous. I thought maybe they cracked down below 6.5, and then you can see there's a lot of there's a lot of places they can go from there. They can go all the way down to 4 or 3.5 before they get close to stopping. So I did get a little nervous here. I went ahead and got at a break even. I'm about to set my click my order in here. I just didn't see enough active buying, or at least the active buying that I thought that I might see after those icebergs held up. There we go. I click out right there. So that was a scratch trade, but I wanted to keep kind of rolling the video because you can see just moments after, you can see they start hitting the offer at 7 even. I got three contracts at 7 even. Not a lot, but it's just they did start hitting it. We went bid at 6.5, and pretty soon, what eventually happened is they made it up to, actually, I think they broke new highs. They went out past 9 even. So if I had just held out a little bit longer, had a little bit more patience, then this trade might have worked out much better. So on this next view that I want to show, this again is another breakout of ZN and ZB and ZF as well. I paused it here because I just want to provide a little bit of context. So you can see down at 6.5 that you had 53,000 contracts trade there. It was clearly bouncing in that range between 6.5 and 8. Came back down to 6.5 and then popped back up. So just a heck of a lot of buying pressure down at that area. And so from a price action perspective, what you're looking at is that the highs represent kind of the area where the sellers give up, where they're going to say, okay, we're kind of done with this. And you're going to see some good volume that hits up into 9 and then it breaks up, and you see the same thing happen over in ZB. So I'm going to resume here and take a look. So you can see that we've got already 1,300 contracts, 1,500 now, 1,600 up in 9, 3,000. And it just keeps printing. And so this is probably a good shot to take right around here, 8.5, 9 area. You probably wouldn't get filled at 8.5. You can see that ZB cracked that 3. And now it's cracking 5. This is a great time to get in at 9 or 9.5. Really, 9 was a good spot to get into for ZN. As soon as you saw the ZB crack the high, you can get in at 9. Now, notice it came up and then it came back down. So you're immediately a little bit nervous that there's going to be a kind of a pullback. But I think that was just kind of an initial pop up and then a little bit of reactionary pullback of people getting out, and then it's going to push up here a little bit longer. But I wanted to include this. I obviously didn't take a trade here, but it's interesting to see the price action of these three as they're about to crack the highs, or the corollary would be cracking the lows at another time. But they do work in conjunction with each other, and sometimes you can use one to kind of lead to see where the other's going. And so it's kind of great to use all three in unison, and that's really kind of the nature of these particular contracts. It's pretty cool stuff to see.